You know what the worst thing is when you're trying to buy a car? You just want some question answered. When you go into the car dealership and you look at the car and you want to ask questions, the last thing you want to feel is the pressure of a salesman. How much more does that come to home ownership? You got mortgage questions, you got real estate questions, but you don't want to buy. You're not ready to run credit. How can you get your questions answered without feeling the pressure of doing a loan application? Tonight's the night. Tonight is Ask a Loan Officer night. So dame tu preguntas. That means give me your questions. If you got mortgage questions, I got mortgage answers. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you are notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and we post our content daily on Instagram and TikTok. If you're not following us on our other platforms, please go ahead and do so. Also, if I answer one of your questions, do me a huge favor. Please like this video. Also, guys, if I answer a question that you know will help someone you know, please tag them on this video. All right, guys? So tonight, I'm going to start with a couple of most popular questions people have been asking. As I'm doing that, if you have mortgage questions, bring them on. All right, guys? So Ask a Loan Officer night. So you can ask me a question, and I'm not going to ask you to fill out an application. I'm not going to ask you to send in your paperwork. I'm not asking you to do anything for ask me more questions. The last thing I want to hear is that someone buys a house because they were uncertain. The last thing you want to do is go out there and shop for a home with any uncertainty. So if there's any uncertainty tonight, I want you to bring it on. It must be residential real estate mortgage questions. I do not do commercial, and I do not do mobile homes. All right, let's bring it on. So Jamie or Jaime, I will answer that question for you, but I will go ahead and answer some of these questions first. Actually, let me go ahead and answer Jaime's question. So what is a 30-year fixed rate FHA? So it all depends on where your credit's at. So if you're getting a 30-year fixed FHA on the West Coast right now, you are looking at an interest rate of about 5.875 to 6% with a 660 credit score or better. I know there are some lenders going 5.75, but where I'm seeing the average lock, so I'm not telling you a specific rate. These are the average locks throughout the United States, 5.875 to about 6.125 right now, okay? Hopefully that helps you out. So, Henry Sierra, what's better, HELOC or refinance to pull money out of your home? So if you have an interest rate under 5% right now, I would probably do a home equity line of credit. Let's say you're 5 years into your loan. You're in 25 years left till you pay off your house. Why would you reset that to year one to pull cash out of your home? Also on a cash out refinance, unless you have busted credit or your home has some type of quirkiness to it, you might have to do a cash out. But if you have tons of equity, good credit, and your home is in amazing shape, go out and get a HELOC, okay? So that HELOC might have a higher interest rate, but it's interest only. That means the more principal you pay, the more you're going to chip away. It's not preset interest. And at any point where you feel like interest rates are out of control, you can take your home equity line of credit and convert it to something called a HELOC. Okay, it's a fixed rate. Then it converts to a principal and interest payment. Also with a HELOC, you don't pay interest till you actually use the money. So that's why I like HELOCs more. Unless rates are back under 4%, I would probably get a HELOC. All right, Henry? So how do you apply for DSCR? So a debt service coverage ratio loan one, you would call a mortgage broker or a mortgage bank. With DSCRs, I like mortgage brokers right now. They have a lot more variety of different types of debt service coverage ratio programs. So call a mortgage broker. You're going to need credit. You're going to need the property to have good rents because they're qualifying you based on the rents. So as long as it rents more than the property, the mortgage payment, then you're good to go. Typical down payment is going to be between 20 to 25% down. Hopefully that helps you out. Lender says there's no way to avoid discount points on a rental property. Is this common? Yes, it is common. The reason why is where the coupon's at right now. You cannot take a higher rate, Quincy, on an investment property. So because, people are buying homes left and right, especially investors, they're making it more expensive for them to buy it. And number two, they're bigger risk. Okay. So number one, They're buying it up. They're trying to slow it down. They want first-time home buyers and homeowners, primary residents, to buy the home. And then number two, they're just higher risk. If something bad happens to the economy, people let their investment property go first. So when you are getting into the loans, you will be paying points just to buy a investment property. Hopefully that helps you out. If you get qualified in the beginning of the year and then try in the middle of the year, will your loan amount be less than your initial amount since you're harming your credit again? No, Tony. So if you ran your credit, after 120 days, your credit expires. If you run your credit again, as long as you didn't do anything to mess up your credit, you should be in good shape. The only time you would qualify for less if interest rates went up or your income went down. But of course, your income stays the same. Rates go down, then of course you're going to qualify for more as long as you don't mess up your credit. So make all your payments on time. Do not increase any balances on your debt. Make sure they don't close out on your credit cards and you will be good to go, Tony. All right, hopefully that helps you out. Is there a benefit to a fully underwritten pre-approval? Emily, yes, there is. Emily Delatorre, is there a benefit to a fully underwritten approval? So if you get a fully underwritten approval, that means you know the lender has reviewed the income, credit, and asset. The only thing left to verify is the property until you find the home. So if you do an underwritten approval and you clear all the conditions, they'll approve it in condition. They get this condition or that condition. If you clear all those conditions, you're shopping around with a blank check, not blank check, but with a golden ticket. That means you're approved up to that dollar amount. As long as your income doesn't decline or your credit doesn't decline, you're good to go. Okay, hopefully that helps you out. Monica Fernandez from YouTube. For employment history, do you have to be at the same job for 2 years or show 2 years of work history? Typically, it's 2 years of work history, as long as you are a wage earner, W-2. As long as you're in the same line of work or the same industry or the same position type, and you go from one job to the next, you just need a 2-year history. Hopefully that helps you out. Guys, if you still got mortgage questions, bring them on. Monica, Emily, Tony, Toy Shop, Juan, Quincy Vo, Jaime. If I did answer your question, do me a huge favor, like this video. Also, if this information affects anybody, please tag them on, tag yourself, tag the person that you know will find this video beneficial, okay? Hopefully that helps you out. All right, so as we wait for more mortgage questions, let's bring on our most popular question, okay? So one of the most popular questions people ask, should I use the builder lender when I buy new construction or find my own lender? So if you are buying new construction, I recommend you try the builder lender first. Unless it's a small builder that might not have a lender, then yes, I would use the builder lender. Here's a secret. They've built the closing cost into the purchase price. So take advantage of that, because if you don't, they're gonna keep it anyways. So use the builder first. I like the fact when I use the builder, you can always ask for, do you do a float down? Okay. Also, do you do a renegotiate the rate, right? A reno. So a lot of things you can do different with the builder than you can do with a regular lender, so the builder lender works with the builder. Okay. So I would suggest you go to them first. Even if you got to pre-approve yourself, when you go to the builder lender, they're going to run credit again. So why do you want two whacks, right? So go to the builder lender first. That is my answer for you, okay? So let's go to another question here from Tony Toy Shop. How does a rent-to-own work, and is it worth it? A rent-to-own does work. I haven't seen pretty much a lot pan out. So when you do rent-to-own, whatever you pay above fair market rent goes towards your down payment or a credit towards your closing costs. So let's say the property rents for $2,000. You pay $2,800. $800 goes towards your down payment. But for some reason, it rents for $2,000, but it really rents for $2,800. They're not going to credit that $800. It's supposed to be fair market rent. That is determined upfront. Hopefully that helps you out, Tony Toy Shop. The problem with rent to own, a lot of people are spending so much time fixing the property, doing other things to the property, that they're really not putting extra money towards the down payment. So a lot of times these landlords or these rent to own companies, they keep the money and you move on to the next person who tries to buy and then the next person. So they do fall out of escrow a lot. Hopefully that helps you out. Monica Fernandez, do you recommend paying off student loans prior to qualifying? So Monica, if your student loan is an income-based repayment, okay? If the payment says 0, as long as you go with a conventional FHA loan, you don't have to pay it. There are no payments added to your debt to income ratio. If there is a balance, they're either going to add 1%, so it's 30 grand, $300 a month, or $150 a month to your DTI, depending on the program. If you're going in with a VA loan, it's 30,000 times 5% divided by 12. Hopefully that helps you out. Remember, where rates are at right now, for every $430 a month, that equals $50,000 of buying power. So if your student loan is 10 grand and that payment's 350, 450, 430, I would pay it off because it's easier to pay off 10 grand than come in with $50,000 for increasing your buying power. Hopefully that helps you out. Quincy Vo, how many times can you apply to a new lender, shop around to only get your credit score dinged once? Does it matter if you're shopping in more than one market? So Quincy Vo, when a lender runs your credit, you have a 45-day window to run your credit with as many lenders as you want. That counts as one credit pool. But here's the problem. Some of these lenders and bureaus, they don't communicate with each other. So sometimes you might get other hard inquiries. Make sure you're working with a lender that knows how to dispute and fight the bureaus to remove those inquiries, which should be pretty easy. Quincy, I wouldn't run my credit with more than 3 lenders. I'm sure with 3 lenders, they should be able to figure it out. I wouldn't go crazy and go with like 10 different lenders, okay? You can probably get confused. Hopefully that helps you out. Guys, if I answer your question, do me a huge favor, like this video, all right? Barathi, how's a 4-year-old charge-off worth $1,000? Look on LO perspective. Is that a big red flag in getting a good deal? If there's a charge-off for $1,000 over 4 years old, I would probably leave it alone. I wouldn't do anything to waken up the beast unless you can get a deletion letter. If you can get a deletion letter, I would attack it, okay? Most of the time with charge-offs, you pay it off, you could probably get it removed. Talk to a credit repair person on that. It's a little bit easier to knock off charge-off than there is to knock off collections. Hopefully that helps you out. Which credit score do lenders look? Gabriel Mendoza. Which credit score number do lenders look at? So if you have 3 scores, they take the middle score. So you have a 700, 650, 600. They're going to use the 650 score. If there's multiple lenders, they're going to have each person's middle score. Whoever has the lowest middle score is who they're going to use as a credit profile to grade the loan. Hopefully that helps you out, okay? John Menta, haven't seen you in a while. What's going on? What's up, Melissa Rivera? Gabriel Mendoza, is it a general credit score or FICO score 2? So mortgage companies run FICO score 2, 4, and 5, okay, when they're judging your credit score. Whatever's the middle score is what they use to qualify you. Hopefully that helps you out, all right? So let's go to the next question. The next popular question. Where should I go to get the best interest rate? All right, so here we go. This is my opinion. I know some lenders in here, they're going to jump in. No, my company's got the best score. Overall, if you're going with a conventional FHA, VA, USDA, non-qualified mortgage, I would go with a mortgage broker, okay? If you're going to go with a renovation loan, or you're going to go with a condo approval or a down payment assistance, go to the mortgage banks. If your government loan is under 620 credit score, FHA, VA, USDA, go to the mortgage banks. When I say mortgage bank, I'm talking about Loan Depot, Guaranteed Rate, Movement Mortgage, Cross Country, New American Funding, okay? The big mortgage banks. You can't go inside and make a deposit there. They're just mortgage banks. If you're going to go with an ARM or a jumbo loan, okay, I would probably go to the U.S. Bank, Golden One Mortgage. Same thing with home equity line of credit, U.S. Bank, Bank of America, because they have a smoking deal over there, Navy Fed, and PNC. All right, hopefully that helps you out. So next question here. If you have a 4-year-old, Tony Toy Shop, if you have a 4-year work history but took a year off and have been working again for 8 months, does it look bad? So if you took longer than 6 months off, you have to be back at work, Tony, for at least 1 year before you can qualify to buy. Hopefully that helps you out. Lily, is it true that one person can only get 10 conventional loans? What do you do after you max out? So you can go with a non-qualified mortgage. Okay, if you have 10 conventional loans, you buy owner-occupied, you're fine. But investment up to 10, if you go past 10, you can go for a non-qualified mortgage. Hopefully that helps you out. Henry Sierra, if I have a 3.25% interest rate and I refinance this year, would I be able to keep my current rate? No, Henry. All you need to do is keep paying down more principal. Pay extra, Okay. Once you pay extra and you knock off a good chunk, you can do something called a mortgage recast. Without refinancing, they will recalculate the balance at your current rate and they will drop your mortgage payment without refinancing. So attack the principal, Henry. Do not refi. Leave it alone. Okay. Hopefully that helps you out. Lender says you can get approved for a credit score with 580. Why is the sweet spot 640 and above? Jaime or Jamie or Jaime, the sweet spot is 660. So you can get approved 580 to 600. So it's all 20 points. 580 to 620, 580 to 600, 600, 620, 620, 640, 640, 660. So 660 is the sweet spot. That's where you can get the best deal on a government loan. Okay. 640 to 659, and 620, 640, and 600, 620, and 580 to 600, and right? It's gonna be a higher rate. That's all it is. You're gonna see a higher rate means you qualify for less home. So if you can knock out a 660, that's where you're gonna get the best deal. 640, you're gonna be have a decent deal. Hopefully that helps you out. Okay. Are there benefits, Monica? Are there benefits to working in the medical field when qualifying? In the state of California, there's something called the GSFA Golden State Finance Authority Platinum Select. It's a grant that will forgive your 3% or 3.5% down right away. The typical GSFA takes 3 years to forgive. So if rates get better, you can refinance unless you pay off the grant, right? Unless you want to wait after 3 years. If you are in the medical field, when you close escrow or you're a police officer or fireman, it's forgiven instantaneously. So if rates get better, you can refinance and grab the lower rate. Hopefully that helps you out. Do you recommend getting a 203K to buy an older home and rehab it? It would be cheaper than buying a house today. George Alberto, Jorge or George Alberto, I like what you're thinking. So we had a borrower that qualified for a $700,000 home. The problem is they had to compete with other buyers that were well overqualified for $700,000. Also, they had a bigger down payment. So this is how they got their offer accepted. They went for a $600,000 home. So they qualified $100,000 more. So they were well qualified. But he wasn't happy with his $600,000 home. So he did a 203K home loan to upgrade it from a 600 to a 7. So now he has a $700,000 home that's fully rehabbed and he didn't have to compete against a $700,000 buyer. Okay. So I love the program. After 6 months, you can refinance it. You can do a streamline if rates pull back to lower the payment. After 6 months, if the home is worth more, you can refinance it conventional and remove the PMI. So it's a great program, George. All right. Hopefully that helps you out. So Cray Oji, Rodrigo Boa. That's someone's name. Okay. Lynn, this is so good. Thank you so much, Lynn. I really appreciate it. Guys, if you are not following me by now, do me a huge favor, hit that subscribe or notification button, okay? So every time we have Q&A. By the way, we do all Q&As the first Monday or the last Monday of every month. So the last Monday of every month will be Ask a Loan Officer Day. So you can bring on your mortgage questions, all right? Hopefully that helps you out. So Ventura County, let me pull it up right now. Ventura County, Ventura Convention. Let me get a second here. So anything above 948. Here's a trick though. Who's at that? So Angie. So the loan limit is going to be 948, 750. But here's what you can do. As long as your loan amount is above 750, 800 grand, you can go to the big banks and they will treat your loan like a jumbo loan. As long as you do 10% down, you have under 43, 41% DTI, your jumbo loan 10% down will have a lower rate and have no PMI. It only works when the loan amount, I think some banks are going to be 800, 850, okay? 750, maybe a few, but typically 800 or higher. Hopefully that helps you out, okay? Baratha, if I got laid off and let's say I found a new job after a month of unemployment, no. So Barathi, so there's something called a gap of employment. As long as you're less than a 6-month gap of employment, you're a wage earner, okay? Same line of work, same occupation, or same position, then you only have to wait 30 days to use the base income. If you want to use overtime or bonus, they're going to make sure your last job, you have a 2-year history of overtime or bonus. So your new job, once you get it, you can actually use it as well. Hopefully that helps you out, okay? If you get pay raise, how many pay stubs do they want to show before you take the new pay for qualifying? If you're at the same job and you have a letter from the employer and there's a VOE that verifies it, off the letter, they will let you use your base pay to qualify, okay? At the same job. And if you change job and got a new one after 32 month worth of pay stubs, okay? Hopefully that helps you out. Ledesma, we bought a home recently. How long we need to wait to if we want to sell it? So, the Ledesma, you can sell your home whenever you want, but you sell it within 2 years without a sickness or loss of job, or you have to move, then you would pay capital gains. If you want to wait it out, you got to wait 2 years, okay? Hopefully it helps you out. You bought a home, you already got buyer's remorse, De Ledesma? Let me know why. Angie Berries. Which banks are those? Depending on where you're from. Some banks are not nationwide. If you send us a DM or give us a call, 714-790-9697, okay? Give us a call, send us a text, or send us a DM, depending on where you are. I think you're in Ventura, right? I think you can reach out to like US Bank, actually, or to Golden One. All right, hopefully that helps you out. All right, next question. Bring out the pop questions. What's the pros, what's the cons of buying a condo? So the pros and cons of buying a condo, okay? Here are the cons. It might not be FHA approved or conventional approved. So you have to go with a non-qualified mortgage to qualify. So if it's not a warrantable condo, you have to go 10% down. So you can buy a condo FHA or conventional. It can become unwarrantable. That means you have less buyers that will have a chance to buy it. But in this market, it all depends, okay? Of course, if the economy is bad and people aren't making their HOA payments, then of course the property can be non-warrantable. So that's the con. The pros, because there's a lack of properties in the United States, okay? Condos are moving up in value faster than ever. So also, one more con, condos HOA can also move up with inflation as well, okay? Doesn't move as fast, but it does move up. But I do like condos. I bought a condo. I'm happy with my condo. So to me, it all depends on your situation. I don't think there's the cons. It all depends on your situation. Like I said, even though I know the other facts about condo, I think I'm going to keep this one for my son and I'll buy another house. All right. Hopefully that helps. Let me see here. One, would you pay down if I had, would my payment go down if I give a $60,000 payment to my principal? One, before you give a $60,000 payment to your principal, you want to call your servicer and say, when I apply 60 grand with the recast, what would be my new payment? So depending on where your rate's at, okay? Right now, rates are at 4, like say 6 and a quarter or 6.375, 6.5. You paid 50 grand, your payment would go down $350. But if your rate's 2.5 or 3%, it could bring it down even more. So call your servicer. I'm about to drop 60 racks. I'm going to do a recast on the amortization schedule. What would my new payment be? Okay, hopefully that helps you out. See here, would you recommend putting 100K down to borrow less from a bank? No. If I bought a home, depending on the purchase price, I would go 5 or 10% down. I would not put 20% down. The difference between 5% down and 20% down, it's about $700 a month. So on a $500,000 home, would you rather put what, $25,000 down or $100,000 down? 70 grand or what? 70 grand, like 75 grand to save $700 a month. And then when PMI falls off, you're only saving $500 a month. I'd save that 75 grand. That's just me. Okay. Hopefully that helps you out. Monica, if you buy a property that will get as getting a pool installed and the current buyer did not complete the project when buying the house, do we have to get new permits? That is something you would probably have to talk to the city. If there's already city approval for the permits, you might not need to. Okay. So definitely check to see if they've got the permits already. Also, when they do, if you add a pool later on, do it sooner than later, because when they come out, they're going to reassess your property and they will increase your property tax. So you bought a home today. It's worth 800 grand. Okay. You put in a pool 10 years later. Now that home is worth 1.2 million, even though the pool's only like 50,000, they're going to reassess it on the 1.2 million. So if you get a pool, Monica, put it in ASAP. All right, hopefully that helps you out. Guys, if this is helpful information, do me a huge favor, like this video. If you're not following by now, hit that subscribe button. Henry, think of buying a second home in the high desert area. How is the market in that place? So, Henry, if you're looking for an Airbnb type of properties, I see the value are coming down. A lot of people bought Airbnbs, can't rent them out right now, and they didn't fully upgrade them. Because they didn't fully upgrade them, they're having problems now renting them out. And they don't have the money. They used all the money they made on Airbnb. So I see those properties hitting the market. But if you're looking at a primary residential area, depending on where you are in the desert, certain areas, they're sitting. Okay? Certain areas, it's not. It all depends. Remember, guys, real estate is local. It can be even different in a different zip code. For what I know right now, overall, not the high desert, Southern California, it's steaming back up. Northern Cal, slowing down. Las Vegas, picking back up. Phoenix, relaxing, okay? Idaho, forget about it, okay? You can probably chill out. Parts of Kentucky, okay? Utah, chill out. New Jersey, chill out. So it all depends. So if you want help, you can give us a call or send us a DM. If you want to see if it's worth buying in your area, we need the zip code you like, the bedroom and bathroom count, what you are approved. If you're not, we can help you get approved. The reason why it's important to us, you can give us a zip code. Prices may vary. Let's say in that area, we had someone out in, I think, Whittier and La Habra. They wanted 780, but if you pull up the zip code, there were a bunch of $1 million homes sitting. But in the 800s, there was not a lot. So if they're buying something in the 800s, they got to buy now. In the milli, they can chill out. So it all depends. So that's when you reach out, we need to know zip codes, bedroom, bath count, okay? We need to know your price range. And if you have a realtor, we should tell your realtor exactly what to do. If they don't, we'll help you find a better one. All right, hopefully that helps you out. Let me see here. How do medical collections affect your ability to buy? So green fly. Lenders don't include your medical collections when you're trying to get approved to buy a home, green fly, but medical collections do affect your credit score, okay? Hopefully that helps you out. How can escrow miss liens on a property? It does happen. That's why you get title insurance. Title insurance, if they do a search on the search of that day, or by the time they close escrow, there shouldn't be liens. If liens popped up afterwards, either the title company, if they didn't catch it and it happened before they did the search, they'll pay for it. But if it happens after, they have no responsibility, okay? Hopefully that helps you out. So what if you take out a HELOC and home values dip? So Linda, if the home values dip, depending on how much it dips, if it dips significantly, they will freeze the HELOC. So prices did dip October and November, okay? So May, June, price hits its peak. Interest rates go to 6.5 to 7. As rates pull back, it's going to get better. So far, with prices dipping, Linda, they haven't froze HELOCs yet, okay? They're really actually giving better deals on HELOCs right now. Hopefully that helps you out. What happens then? They freeze it. Whatever you have payments on, you got to make payments on. All right, Linda? If you haven't used it, then you don't have a HELOC to worry about. What income would you say needs for $700,000? Tony, please send me a DM. Give us a call, 714-790-9697. Or you can email us at info@what's-a-mortgage. I need to know purchase price, down payment, monthly debt. So there's a lot of things that factor into it, okay? Hopefully that helps you out. How can I calculate the recast on my loan? I don't know where you are in your loan, so it's really hard to calculate and how much you're paying towards your principal one. Call the servicer and ask them, hey, I'm going to pay X amount. What would the recast payment be? Ask them for, hey, can I get a amortization schedule, the new one, once I put $60,000 towards my house or whatever you're going to put towards there. Minimum, they want to see you put $25,000, okay? But definitely ask them. Hopefully that helps you out. So in more Sylvia, if you want to know what you qualify for, give us a call, send us a message, and we will answer those questions on how much you qualify for, okay? So on $100,000, I can't tell you the price because we don't know the down payment. On $100,000 though, you qualify for $3,583. Hopefully that helps you out. So depending on the purchase price, down payment, the monthly payment is about $3,500 is max. I probably won't go to $3,500 because you will live on just top ramen. All right. Hopefully that helps you out. All right, guys. Let me see any other questions. Next popular question. What are the pros and cons towards import? Sylvia, please send us a message. We are doing all qualifications when you message us directly, okay? What are the pros and cons of down payment assistance? The pros, little out of pocket. Home goes with an equity, amazing, okay? You get to capture the equity, little out of pocket. The con, depending on what you get. If you do equity sharing down payment assistance, they own half of your equity. If you do one with a grant, I like those, but sometimes you have to hold on to that loan for a certain period of time before, and if rates drop, you can't refinance until that time period. Same thing with a loan, okay? So sometimes with down payment assistance, you can't take advantage of when rates pull back unless you pay off them whatever you borrow. That's the con. The pros, you gain a bunch of equity, little out of pocket. Hopefully that helps you out. What paperwork is needed, Monica? You need to do a soft mortgage credit pull that doesn't affect your credit score. You need your income for the last 2 years, if your W-2 paycheck stuff for the last 2 years, and a bank statement to show where your down payment's coming from, okay? Hopefully that helps you out. All right, next one. Should I wait to fix my credit before I buy my house? What I would do, reach out to a lender, do a soft mortgage credit pull, okay? What happens if your home pops up before your credit's fixed? Then I would buy it, fix the credit, refinance, okay? Of course, if you don't qualify because your credit's not fixed, then you got to fix your credit first, all right? So it all depends on your situation. If you qualify right now, qualify for what you can, and then work on your credit while you shop. If nothing pops up, at least you get your credit fixed. Hopefully that helps you out. All right, guys, let's do another one. I think, what's the next one? Let me see here. Let me answer this one. Linda, can you pay off a HELOC if you refinance in the future? Yes, you can do a cash out refinance or rate and term and consolidate it. It all depends on what type of HELOC you did. But yes, you can, Linda. All right, hopefully that helps you out. All right, next question. How far ahead should I prepare to buy a home before my lease is up? I would probably prepare 90 days. Do a soft mortgage credit pull. It doesn't hurt your credit score. So you need to see where you need to make changes so you can qualify. If you already qualify, good. If you don't, you can work on your credit. You can pay off some debt. You can save more money. So I would do it 3 to 4 months before your lease is up. So when you go start shopping, you're ready to rock and roll. Okay, hopefully that helps you out. Next question. How long do I have to wait before I can remove a cosigner from my loan? So typically you want to wait at least 6 months so you can use new value. But after that, as long as you make enough money to qualify, then you can go ahead and do it. All right, hopefully that helps you out. Import Sylvia, is it true the HELOC 95.5 is hard to pull? It is hard to pull a 95% HELOC, okay? I don't see a lot of lenders doing it, but mostly they're 90%, not 95. If you can get a 95, the rate probably gonna be nasty, okay? It might not be worth it. It all depends how bad you need the money. Quincy Vo, thoughts on a 6-1 ARM? If you're gonna do an ARM, even though I know rates are gonna pull back this year, I would probably do a 5, just to be safe. Depending on your purchase price, that looks like a high rate for an ARM right now. All right, hopefully that helps you out. Let's see here. I think that's the last. Can I refinance if I owe more than the house is worth? So if you have a conventional loan, hopefully you came in with a big enough down payment, you can still refi. If you didn't and values go backwards, then you would have to when rates pull back, it should push your value back up. So you just have to be a little patient with it. On an FHA, VA, or USDA, you can do something called a streamlined refinance. It doesn't require value. As long as you made all your payments on time, you got decent credit, you can do a streamline. They will lower your payment to whatever the fair market rate is. Okay, let's say you have a 7. You want rates to be at least 6.5 or better. That includes all your closing costs and everything to refinance. You want it to be at least 0.5% or more, and your closing costs, you need to recoup in at least 3 years or it is not worth it, all right? Hopefully that helps you out. Do you know any lender does 90%? Yes, U.S. Bank, I think, unless they change the rules, U.S. Bank, PNC, Navy, Fed, they do 90% CLTV, okay? Hopefully that helps you out. What is better, FHA or conventional? Tony, if you have above a 740, go conventional to chase the cheapest payment. FHA, under 640, or under 740, go FHA. Unless you qualify under 100% of the AMI, you have 680 to 740, then I would go conventional, okay? Hopefully that helps you out. Monica, for first-time home buyer, what is better to go FHA or conventional? If you have a 740 or above, I would go conventional. Under 740, I would go FHA, unless you fall under that new rule for FHFA. If you have a If you fall under that rule, there's no loan level pricing adjustments. I would go conventional. Okay. Hopefully that helps you out. The reason why I like conventional, the PMI falls off without refinancing. Okay. Also with FHA, there's upfront PMI and there's monthly, and the monthly is typically higher unless you have even with really good credit. Okay. Hopefully that helps you out. All right. So hopefully I answered a lot of your questions. If I did, do me a huge favor. Please like this video, all right? And if you're not following by now, please hit that follow button, all right? Don't forget to follow us on our other platforms, all right, guys? And for those of you who want to get a hold of me, who want to get a hold of my team, you want help, you want to go over those payments, see where you qualify, give us a call, 714-790-9697. Give us a call, send us a text message, or send us a DM, or email your loan estimates or your questions to info@what'samortgage. Okay. How much value percentage will you add it to additional room? Import Sylvia, it all depends on the other comparable sales with the extra bedroom, okay? Yes, on FHA, the PMI is permanent unless you put 10% down on your FHA loan when you bought your home, okay? Do you guys do HELOCs? Yes, we do. You can either reach out to us, NFT, or you can go to US Bank, or you can give us a call. We can help you shop for HELOC, all right, guys? Thank you guys again. Really appreciate it. We want to end all our episodes. Thank you, Tommy. Our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a great night.